Okay, guys, there is a lot to talk about today. Okay, so we've seen a lot of things going on. We see Silvergate Bank, kind of being wrapped up, and we see that Circle had some funds in there as well, and there's a lot of speculation around what that means for USDC. There's a run on USDC. We can then see that being depegged. There's a lot of other things also going on in the space, and this is something that I think it's important that we understand. You know, it's not a black swan event either. A lot of this stuff is quite predictable when we actually look at the data. So on this channel, we've been talking about stablecoins quite a bit over the last few months. We obviously saw a lot of concern over different stablecoins recently in the recent months, right? We saw a lot of really big influencers saying USDC is the one to kind of go for. We were not so convinced on that. And in fact, it was last week that I was saying that USDC seems a little odd in the way that Coinbase only had a few pairs with it, whereas you would actually expect something like Coinbase or someone like Coinbase to have a lot more pairs if they were really pro USDC, because I was considering moving from USDT to USDC just a week ago, and I did not make that decision. At least I didn't do that because there wasn't really enough trading pairs, and I thought that was strange behavior. As I spoke about this to the members last week, they can all recap. Now, I bring this up now because obviously we see USDC depegging. We can see the exposure that Circle and USDC has to Silvergate Bank, and we can see a huge amount of withdrawals occurring. And it's not just USDC either. There's mass panic occurring again. Now, we've seen this a few times, right? We've seen this with UST, for example. We saw this only a few months ago during the FTX saga, and people kind of thinking that USDT was going to go down. And yet here we are with USDT actually surviving the most, or seems to be the best one out there. Now on the channel, I'm going to kind of put my hands up and say we really like BUSD, and we still do like BUSD. Obviously, we do not recommend anyone going near it because US are attacking Binance, and this is a Binance branded coin. It's not actually a Binance smart chain coin. It is basically a USDP called BUSD, right? Essentially. Now, if you go to Paxos, you can see here that there is no difference as far as I could see between the regulated BUSD and the regulated USDP, right? And Binance BUSD is exchangeable not only to USD, but also USDP, right? So when we kind of think about these things, it's very strange that the US would attack BUSD and not attack USDP when they're exactly the same coin. Essentially, they're one-to-one, right? They are exactly the same. The only difference is one is branded as Binance, right? So when we start thinking about how the US is attacking Binance, it makes sense that they're going after BUSD and not USDP, right? But I'm saying these things because we really liked the fact that this was regulated out of New York. It was one-to-one. It was actually, probably the safest one out there until the US came in and just said, you cannot print anymore. Now, that doesn't necessarily mean that it's a bad thing. It just means that there's eventually this circulating supply of BUSD will eventually go. You can still trade it and use it, but essentially no more is going to be minted. So we have to kind of consider those things as well. So when we kind of see everything that's going on, right, with stablecoins, we see USDC struggling, and I don't think it's going to fail. There's a lot of speculation around how much USDC reserves are held in Silvergate and what that might actually mean for the damage done to Circle, right? And I don't think it's actually that bad. It's bad, but not brutally bad, right? But there's the panic setting that's going to compound the issue in the same way that we saw with Luna and USDT, right? It's the people who are then overreacting, the emotions that are going to overreact to the conditions that are occurring right now. So that's the issue, not so much the actual damage of having some exposure to Silvergate Bank. Now, with all that being said, there's an impact on price movement, there's an impact on Bitcoin, and in this video, we're going to be jumping down into some of the on-chain data, taking a look at what's going on with the flows of Bitcoin, right? Are we thinking that USDC has an impact on Bitcoin? or not, right? And I think the on-chain data is going to give us a clear indication of what people are actually doing, right? Are they just taking their USDC and then turning it into fiat, or are they actually utilizing it and dumping it into something like Bitcoin, right? Even though price is coming down here, there's definitely going to be a mixture of things occurring. So let's go ahead and jump down into our data, right? So up here, top right-hand corner, like we always do, we have inflows, outflows, and then difference. Now we have negative Bitcoin on the exchanges. So this year, from the 1st of January 2023, we can see 1.9098 million going on, 1.9173 million coming off, meaning that 7.48 thousand Bitcoin has come off the exchanges. I'd still say this is neutral. It's not bullish, it's not bearish, and we have a pretty good reason as to think about why we've seen an outflow from exchanges, right? So just in the same way that we have with FTX, we see a lot of people not trusting the exchanges and withdrawing from the exchanges, right? If the exchanges have exposure to Silvergate, for example, then you're not going to want to be there. And on that note, check out in the description down below a link to Ledger. Now, Ledger, it basically provides hardware devices that basically allow you to withdraw your crypto and keep it offline. Okay, they're safe. They're not 100% safe, but they're safer than exchanges. They're safer than warm wallets. So check it out. Linked in the description down below. The only thing I would say, there's many different devices out there. It doesn't have to be Ledger. We like Ledger on the channel. We use Ledger. We understand Ledger, and they're great, right? We're affiliated with them. We do get a kickback if you use that link in the description below. So that does help support the channel. But what I am saying here is that do your own research, take a look at other devices. The only thing I would say is that you'd have to make sure that you buy one directly from the manufacturer, not from a third party, because there are fake devices out there. Always make sure that you're using the correct link. It's the correct URL to the correct website. And, you know, in the case of what we've got in our description, you know that's going to be legitimate. So ledger.com, don't check for misspellings and all that kind of stuff. If you Google it, watch out for any sponsored content. You don't click on any of those. There's lots of things you're going to need to do to keep yourself safe. Once you've got a device that is legitimate and original from source, i.e. from the manufacturer, then you're going to be able to withdraw from the exchanges and keep it in cold storage offline, and you should be safer, right? And what we're seeing here within our data is some of that. The same what we saw with FTX, right? We see a lot of withdrawals of Bitcoin from the exchanges because we do not know and we do not trust that the exchanges are going to be solvent if they have been using Silvergate Bank, right? And therefore, getting off the exchanges is going to be number one. That's a priority number one right now, okay? And you're starting to see this, right? First come, first serve. Get off the exchanges if you are on the exchanges. Use a hardware wallet where possible. Okay, you can go into a warm wallet temporarily, but the ambition should always be to try to get a cold storage device. We can see that this is starting to take a bit of a withdrawal hit. We can see this here. So again, our data is supporting the fact that there's not only a run on banks on fiat, there's also a small run occurring now on exchanges for BTC. Now, as we take a look at these inflows, you can see right here, there's a mixture. There's panic selling occurring, and there's panic withdrawing occurring, and we've got a significant spike to the upside. Okay, we can see here that we've had 60,000 Bitcoin withdrawn from the exchanges and 50,000 put on. That means there is a transfer of wealth occurring, but there's also a lot of fear around the exchanges. We want to be a little bit cautious here. There's a lot of buying occurring, but there's also a lot of selling occurring. As I take a look at wallets, this is where things get really interesting. Who is doing the buying right now, and who is doing the selling? So we can see that Bitcoin Dust, these are the vulnerable retail investors, have more than 0.01 Bitcoin, right? So really small wallet size, but there's a lot of them, right? And there are now 11,629,974 wallets, basically meaning that these guys have purchased up during this recent dip. Now, that could be wise if you're going to be holding long term, right? I've been doing some buying during this pullback, and I'm going to continue doing some buying as we kind of pull back deeper. But obviously I'm thinking super long term, right? And I hope that that's what these guys are feeling and that are looking at. I don't want to see these guys kind of sell. I do think that eventually they will. They'll get bored, they'll get fed up, they'll get frustrated, or maybe even just succumb to the fact that they need to sell because of the economic climate. A lot of people are going to lose their jobs over the next few months. I would have thought we're going to see a significant increase with the unemployment rates and stuff like that. And so it's going to be interesting to kind of see how these kind of things develop. Now, On the other retail side of things, we can see Krill over 0.1 Bitcoin, also buying the dip. We can see Shrimp over 1 Bitcoin, also buying the dip. And we can see the dolphins, not so much. They're not really participating. So these high net worth individuals of over 10 Bitcoin could start to see a little bit of a concern over what is occurring. Whereas typical retail investors that follow Moonboy channels, for example, also commonly known, unfortunately, as dumb money, they're FOMOing in because, you know, it's just a dip. It's just a dip, right? But essentially, no, all jokes aside, this is a concern because these guys are potentially going to get themselves wrecked. Not all of them, but a large chunk of them, because you won't see everyone sell, but there'll be pockets of retailers that will end up selling at some point. Now, when we take a look at the larger size wallets, what do we see? Well, we can see that the sharks over 100 Bitcoin, slight pull to the upside here, but nothing major. They've been locking in their profits during this entire pump to the upside. So yeah, that again, nothing too much to concern there. The whales are dumping. We can see here that there were a 2015 wallets, and we're now down at 2007. Again, our trend for these whale wallets continue. Let's go ahead and take a look at the 365-day view. You can see that they continue to pull down. So again, essentially everything here is on track. So until retailers, these guys, are selling their Bitcoin, there really isn't a lot of Bitcoin for the whales to buy. So at the moment, the whales have been selling the Bitcoin to the retail investors, and you need the retail investors to sell it back to the whales at a cheaper price. I think that will happen because until it does, unfortunately, price will have to go down, and it will go down to uncomfortable levels for those retail investors. So we'll keep a close eye on it, but essentially that's kind of what the data is suggesting. The data is suggesting here that big money, institutional money, smart money is not backing the moves for Bitcoin. The moves are still being backed by small retail investors. And unfortunately, we know that there isn't a lot of funds and there is an overreaction to price movement when it comes to retail investors. So we're going to be really, really cautious here. Unfortunately, I think that this is going to play out pretty brutally for retail investors. I think retail investors are going to be on the wrong end of this one, and smart money and institutional funds are the ones that will be on the right side of things. So we'll keep a close eye on it, but for now, everything is looking pretty much as we would kind of expect it to be at this point. I'm disappointed that we are not yet seeing some of these retail investors selling their Bitcoin to the whales, because until that happens, we're going to see continuation of this downward move. And it does give me concern because when we jump into the charts, we can see, of course, these deeper moves, right? With the Z wave could be anywhere between 10,000 and 16,000. And if we do not see whales buying, then unfortunately we might be coming down to the lower end of that, and that would be very, very brutal for crypto. Fantastic life-changing opportunities for many, though, if you're sticking around in this bear market, which I do encourage people to do, because this is really where the hard work happens. It happens in these lows. It doesn't happen in the bull market. The bull market, all you have to do is sell at the right point in an unemotional way and not get too greedy. In a bear market, you have to be very, very analytical, and you have to not jump the gun and act too emotionally too soon. No, don't FOMO in too early, for example. Ultimately, I'm starting my DCA because a Z wave is the end. There's nothing else I could possibly plot here to go down deeper. 10,000 is pretty deep. So if we do lose that and we come down into those lows, it's going to be pretty brutal, but a fantastic opportunity nonetheless. From our smart money concepts, we can see that we're heading down now into this little range here that we had marked out. This is on our daily chart, 19,000 to 19,900. We can see that we're touching into there. As per my morning video, I still think there's a lot further to go. We can see that we never entered into a bullish structure on our daily chart. We had our change of characteristic to bearish. We had our BOS, which is our break of structure, and our continuation of our trend to the downside. We never broke upwards and changed our characteristic to bullish, so still remains bearish, and that hasn't changed. On our weekly time frame, we can, of course, acknowledge that we do have this gap down here. This gap is something that we will be looking to fill, in my opinion, which will take us down into the $17,000 level. You can see we're finally breaching into here. We have a minor change of characteristic to the upside, but I think that's going to get lost if I'm being honest. We can see these from time to time, for example, this one, and it doesn't last very long. Now, with this, if I zoom out of our weekly chart here, I will point out the obvious, which is that there are no other imbalances in the order books on this weekly chart with Binance. Okay, now if I go back into a larger time frame like Bitstamp, there are some that were very early on that never got filled. You do not have to fill these. but there's a high probability that you will, and that's why I show you this zoomed out view. There are no others here because they've already been filled. This one hasn't been filled yet, so chances are we do go ahead and fill it. Now, there's not a guarantee, but there's a high probability of it, okay? So when we take a look at it, we think, okay, what causes this? This is an imbalance in the order books. Basically, a lot of buying pressure occurred here without any selling occurring. So price jumped from the low side to the upside pretty sharply. Then, of course, we can see that price has to come back down and cool off because you have to have these gaps filled. You don't have to, but it's more than likely. An observation of smart money concepts is that when you have these imbalances, let's say an institution bought this and there was no one to sell to them, they're not going to continue buying at the higher price. They're going to want to wait for price to kind of naturally gravitate back down into this gap and then buy again. That's the concept. That's the idea. Okay, so follow the money. It's why we take a look at the charts and the wallets and all that kind of stuff. You follow the money. Ultimately, we're bearish on this. We have our kind of levels that we're looking at. Ultimately, we have our big bearish situations that take us down lower. We have our key levels of support and resistance and supply and demand ranges. Ultimately, we're looking to come back down and retest this one at 17.6 to 18.8. That's going to be an area that was previously demand. We push past it. Is it going to turn into a demand again or is it not? I don't think so, but we'll see how it kind of goes. We might consolidate on it and then lose it. And of course, the big range that I'm most focused on is 11,600 to 13,900. This range right here goes back to being resistance and supply back in July 2019. We've pushed past it. We've never come back and retested it and turned it into support. So that's the one that I'm hoping does turn into support level for us. But until those whales are buying, it's kind of fair game to see price be a lot more volatile. So ultimately, everything here is looking pretty interesting. I think there's going to be some pretty good trading opportunities, specifically as we kind of think about these areas here. So if you are a trader, then why not check out BitGet, linked in the description down below. They're running an offer at the moment for deposit 50 USDT and get 10 USDT as well. So again, you got all the rules here on the link in the description below. They also do up to $8,000 in rewards for signing up. So check that out if that's of interest to you. Now, we are running some trading competitions in our Discord server every single week based on ROI percentage. So if that sounds of interest to you and you want to kind of, win $100 a week by having the best ROI percentage, then why not sign up to BitGet? It's a BitGet competition in collaboration with Cheeky Crypto in our Discord server. So check it out, guys. Join us in Discord for more information on that every single week. Why not? It's completely free, and all you have to do is your regular trading. So if you're a trader, why not check that out? I think there's going to be some fantastic trading opportunities with shorting the market across many different altcoins, including Bitcoin here as well, as we kind of get into this and as we see the market become more volatile over time. And I'm going to leave the video there. If you found it useful, you know what to do. Smash that like button. If you're new to the channel, subscribe. If you haven't yet joined us in Discord, check it out. And why not check out BitGet as well in the description below. Until the next video, though, guys, have a fantastic day.